is another Thank God Friday to the start of the weekend. I am Melissa Enoch here at the FMDQ studios in Lagos, and we welcome you to the show.
And I am Grace Abarago. It's the 16th of January. This is your Monmos.
All right, let's begin with your news now for today. Nigeria's Securities and Exchange Commission has revised capital requirements for brokers, dealers, fund managers, issuing houses, fintech firms, and digital asset operators, according to a circular issued today. The new framework, replacing the 2015 rules, aims to improve market resilience, eliminate undercapitalized firms, and reward operators with strong governance and scale. The circular triples broker capital to 600 million naira, raises dealer requirements to 1 billion naira, and sets broker-dealer thresholds at 2 billion naira. Fund managers, private equity firms, digital asset operators, issuing houses, and market infrastructure players face new tiered minimums with dynamic rules for firms managing assets above 100 billion naira. The SEC has given the industry an 18-month window to comply with full implementation by June 30, 2027, expected to drive consolidation and strengthen the quality of stability of Nigeria's capital market. At the International Conference on the Role of International Trade in the Global Energy Transition, policymakers and industry leaders are examining how trade, investment, and supply chains can accelerate the shift to clean energy while supporting energy security and economic growth. Let's listen.
Multilateralism is not dead, and climate change is real. Unleashed power orientation in international trade relations and the consequences of global warming hit the hardest those in the global south who did not cause mounting geostrategic tensions and those who contributed the least to carbon emissions. Responsibilities for climate change mitigation are common but differentiated, and so are the capabilities of countries at different stages of development. Since World War II and reinforced by the creation of the WTO in 1995, the fundamental principles of the GATT-WTO treaties have determined the success of the multilateral system. These cornerstones include non-discrimination, MFN national treatment, market access through tariffs rather than quantitative restrictions, fair trade rules against dumping and subsidization, transparency, peaceful settlement of disputes, and policy space for legitimate societal objectives and sustainable development through special and differential treatment for developing and least developed countries. These rules and principles have been tested time and again. They demonstrated impressively their key roles in promoting growth, prosperity, fairness, equity, and sustainability of trade relations within the multilateral rules-based system. Multilateralism in trade and climate change mitigation through energy transition are at the crossroads, as the title of this conference says. Support for globalization and trade liberalization is faltering in the global north. While the global south criticized WTO GATT rule books since the era of decolonialization, many of them, especially in Asia, have become staunch supporters of globalized trade that helped lift hundreds of millions out of poverty.
Zimbabwe has reported a resilient performance for the third quarter, ended November 30, 2025, driven by strong data growth, fintech expansion, and continued network investment. Data usage rose over 50% year-on-year, while voice traffic increased 35%. EcoCash saw a 28% rise in customer activity and a 36% jump in transaction volumes. The group added 103 new base stations, expanded AI-driven network capabilities, and upgraded its Yamurai AI chatbot. It also announced plans to carve out and list its infrastructure business, Econet Infraco, and declared an interim dividend of 60 cents per share. Meanwhile, Ghana will scrap long-term mining investment stability agreements and double royalties, the Minerals Commission said. Acting CEO Isaac Tandos said the changes to be enacted into law mean Newmont Stability Agreement, which expired in December, will not be renewed, while AngloGold Ashanti and Goldfields Agreement will phase out by 2027. A draft bill proposes royalties starting at 9% and rising to 12% if gold trades above $4,500 per ounce, up from the current 3% to 5%. The reforms also include stronger local content rules and support for Ghanaian firms. In Abu Dhabi, the Green Hydrogen Summit held, anchored by the nation's ambition to emerge as a global leader in green hydrogen innovation and investment. The summit brings together key stakeholders to drive collaboration, accelerate the global hydrogen economy, and advance cleaner, more sustainable energy solutions. Here are excerpts.
Green hydrogen, in my opinion, is inevitable. It's not something that we take in parallel or we stack it as a secondary option. It is a must if you want to achieve energy security, if you want to diversify our energy portfolio, and if we want to reach the global targets of net zero. If we now turn all the electricity on planet Earth across the entire globe into renewable energy sources, all electricity is renewable, we will only be able to mitigate 30 to 50% of the global carbon footprint. We cannot do more. The remaining 50 to 70% needs the molecule, needs the green hydrogen. Green hydrogen is required in hard-to-abate sectors, steel industries, aluminum, aviation, shipping, fertilizers and food security, co-firing, burning, long-haul transportation, and the list goes on and on and on. The molecule is truly the next generation of clean energy. Out of the molecule, we can produce the entire spectrum of all the fuels that we currently use sourced from fossils. E-kerosene, e-diesel, e-methane, which is equivalent to natural gas, and the list goes on and on and on. I stand in front of you, ladies and gentlemen, proud and tall, launching the Green Hydrogen Summit.
In Zimbabwe, Caledonia Mining Corporation plans $162.5 million in 2026 capital spending, including $132 million to develop Zimbabwe's largest gold mine, the Bilboes project. The mine, expected to start production in late 2028, will produce 200,000 ounces annually from 2029. Called the Bilboes mine, it follows Caledonia's existing 80,000 ounces per year Blanket mine. To fund the development, the company announced a $125 million private placement in convertible bonds due 2033, alongside debt, contributions from existing operations, and specialized financing. The project benefits from Zimbabwe's government's recent reversal of proposed gold royalty and tax changes. Finally, on News Now, Ethiopia Electric Power has recorded its first ever profit following a major reform and debt restructuring program that turned around the state-owned utility. The government absorbed more than $500 billion of EEP's debt owed to the Commercial Bank of Ethiopia and implemented a power tariff adjustment, easing pressure on the utility's finances. Brooke Taye, CEO of Ethiopian Investment Holdings, said EEP posted a profit of 2.1 billion birr in the first half of the current fiscal year, marking a sharp improvement in operational and financial performance. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market rounds.
pace at which Ethiopians have adapted to digitization, digital transformation is astounding. I mean, to add the statistics you've listed out, we have 18.5 trillion digital transaction now, right? Big. That is over 50 billion per day, right? And probably 2.1 billion per hour. So, the previous funnel probably took an hour. That means 2.1 billion was being transacted digitally. So imagine if we're doing this in cash. So yeah, that is what is a biggest success. But the whole idea of moving government into digital transaction, digital service is a big leap forward. Most services are now digital. The Ministry of Finance, for instance, 98% of transactions are done digitally. Imagine this is the biggest spender in the economy.
Back to Money Moves. Let's now go over to Grace for today's market updates. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets wrapped up trading for the week, starting off with the equities. The Nigerian Stock Exchange edged up 0.04%, while the BROVM added 0.09% to 348.97. The Nairobi Securities Exchange was flat at 193.87. In South Africa, the Johannesburg Stock Exchange fell 0.88%, and in North Africa, Morocco's MASI declined 0.61% to 19,152.48. Let's do a quick round on some of the Pan-African currencies. The Rand weakened 0.29% to 16.38 against the US dollar. The Egyptian pound inched up 0.02%, while the CFA franc strengthened 0.35% to 564.47. The Kenyan shilling was flat at 128.99. The Moroccan dirham slipped 0.05%, while the naira is 0.02% to 1,420 naira 31 kobo as at 13:32 GMT. Now, finally, two commodities decided. Brent crude rose 1.10% to $64.46, while US WTI gained 1.18% to $59.89. Natural gas climbed 1.82% to $3.18, and Arabian gasoline advanced 0.53% to $1.79 as at 13:22 GMT. Finally, two metals prices. Gold slipped 0.51% to $4,600.30. Copper dropped 2.59% to $5.83, and platinum tumbled 4.19% to $2,293.40. Aluminium is 0.85%, while iron ore fell 0.27% as at 13:23 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up on this last day of the week. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMBQ studios, we say thank you very much for watching and do have a wonderful weekend.